Alrighty, good morning, everybody. It is Wednesday, March 9th, 2022. Let's get started here with our pre-market analysis. Just real quick, just to look at yesterday, which was a complete mess. We actually, if anyone was here in the trade room, remember I didn't make any trade calls. We were basically pretty quiet. But just kind of want to show you here, after we finished here at 8 a.m. So coming out of the open, it was just kind of like this mad dash down, mad dash back up, mad dash down, mad dash back up, and right to our eye level. So 42.14. If you were here in the pre-market yesterday, it was 42.13. And just before the market opened, after we did the pre-market with my members, I told you I was updating this 1 point higher because it seemed to line up much nicer with all previous historical data. And sure enough, we came up. We never broke 14 by more than 2 points here. In fact, I think it was like a point and a half break the first time. We got this major sell-off for whatever it was, 20, 30 points, 40 points. Came right back up, only broke 14 again by, again, I think it was 2 or 3 ticks at that point, and then got this major sell-off going into, I guess, the beginning of the second hour of the open. And then again, it was just up and down, up and down. So we didn't do anything. I told you guys it was a complete mess. So what ended up happening was, and I told you, eventually the market is going to shake out and we're going to get a little bit of logic and things should start to work out. So the market came up. Our first expected resistance yesterday, if you remember, was 42.40, I believe, to 42.46 based on, I think there was maybe a swing low that I was looking at from 46 over there. And so that was kind of the top end of that zone. And it came up, did break to 49, so completely disrespected that area, but essentially held, pulled back right to our eye level, to the tick, came right to 22, bounced out, and then our next expected resistance zone was 75 to 85. You guys should remember that from the pre-market yesterday. The market came up to 75 to the tick and then sold off here going into the afternoon. So, I mean, basically came up to our first zone, 40 to 45, pulled back, held the eye level to the tick, came up, held 75 to the tick, and then started selling off. We're getting a whole bunch of volatility at the moment. My dome is jumping all over the place here, so I'm just, look at that. This thing is really taking off to the upside. I just noticed my dome kind of going nuts here. So something must have just dropped. But anyway, came right to 75, right to the back end of our next expected resistance zone, and went ahead and sold off again going into the afternoon there. Came back up right into our next eye level at 36.75 or 37 there. Broke it by 2 ticks and then sold off to the close, coming right back to 41.51. So again, some amazing stuff going on with these eye levels. Coming into this morning, as you can see, we're still stuck within yesterday's price action, which is not a good thing. I'm really not interested in trading within all of this garbage over here. So ideally this morning, and we'll go ahead and start looking at everything, ideally the market's going to break out outside of yesterday's range, so we can get out of this little choppy area and see where else we can take the market. So let's go ahead and do our pre-market, and we'll jump up and get to the most relevant time frame. The quarterly, the monthly, the weekly, nothing's really changed. Everything looks the same. And daily now, whoa, look at that. So now that we've got this nice strong push right now, this current daily bar, look at that, looking nice. Yesterday's bar closed looking pretty bearish, right? And you can even kind of see, if you really zoom in and look, there's our two shaded regions there. And again, there was a push up into that one and a pullback, and then a push right to the bottom end of that, the next shaded zone there. So that looks pretty bearish to me, but what's going on right now might be a nice confirmation for the bulls. Especially if we can get up and break through the previous daily high and start to get continued bullish momentum, we could be getting a turn. What I'm seeing here on the daily, outside of the bearish candle that closed for yesterday, I don't necessarily see any type of bullish clue from the low down here. Remember back on the 3rd, we saw a bearish clue up at the top, and we had to wait for that candle to close. So at the end of the day on the 3rd, we had a nice clear bearish divergence off the highs. Really couldn't have been much of a better signal. And again, we've got this whole sell-off. So the fact that we don't have the strongest bullish divergence from the low right now makes me a little skeptical that this is going to be like a major turn for an attempt to push higher. But again, anything's possible. We don't have to have a signal in order for the market to do whatever it's going to do. So I'm just kind of noticing I don't have the signal I'd like to see for a major reversal, but hey, I guess anything's possible. I'm still kind of expecting to see something down here. So we'll see what happens. Let's go down into our 4-hour now and get into our intraday time frames and take a look here. So previous daily high in red, previous daily low down in green there. Getting through that high is going to be, again, the most ideal situation for me this morning because I want to get away from this block of choppiness that we were in for, all of yesterday. So there's a potential there's a potential divergence forming off of the high right now. And as it continues to push, we'll still see it until it breaks the high from yesterday. So when price does get through the high of yesterday, we'll have a higher high in price and a higher high in RVI. So we won't have a bearish divergence anymore. So I'm going to be watching yesterday's high, not only because I'd like to see us get through that and get some follow through to the upside, but because if it doesn't break, then we will have a nice strong bearish 4-hour divergence. So watching that, this little zone up here that we marked yesterday, I'm going to go ahead and expand it out for today. That's still going to be a trouble zone there. Again, the high was 75. Somewhere between 75 and 85 there, definitely still a valid trouble spot. So I'm going to highlight that for today. And then a little bit further up, that 61.8 retracement is still in play. And in fact, I want to tighten this up a little bit, this other area that we were looking at. So the 3rd zone that we never got to yesterday, I'm going to go ahead and tighten this up. This 61.8, we want to watch. So somewhere right around that 43.12 area is a level that I wouldn't be surprised to see have some type of hold this morning. Just keep in mind anything's possible in the market. Just because there's an expectation doesn't mean it has to happen. But you need to be aware of these areas. So I've got that give or take, say 43.12, give or take a point on either side up there. That's that next zone that I'm watching. Let's go down into our 60-minute here. And I thought I had these copied over. I think it might be the 60-minute, that is. So let me update this. Still got our 75 to 85 here. A little bit further up, again, we have that 43.12. And what I want to do is we left this as just a general zone up here yesterday. We said basically the 61.8 up to the eye level at 24.50 is going to be a zone that could potentially hold. What I'm going to do today is I'd rather focus on the lower end right off the 61.8 around 43.12. And if that breaks, then I'll be looking for something up near the actual eye level itself. So rather than having a big 10, 12 point zone up there, I'd rather focus on the two extremes, basically the 61.8 itself. And if that breaks, we're looking at that 24.50 again. Any further than that is going to bring us up to that major swing low that I marked a few days ago over here at 43.41. Now, what was 42.75 yesterday? Does anyone remember where 42.75 came from? 42.75 was the major swing low back here. So for anyone who was here a day or two ago, we went ahead and I believe I drew a line. It might have been I didn't draw one across that. I just used it as our line of demarcation. But the hold from yesterday, the high of yesterday, is that major swing low back here at 42.75. So hopefully you guys are seeing that. You might think that I'm just picking up a bunch of random things here and sometimes it's working. These major swing lows happen to hold over and over again. And that's why I plot them. And that's why yesterday we had 75 and then there were a cluster of major swing lows over here. And so it was basically 75 to 85 there. This morning, if we get through, and we've already tested it to the tick, if we get through there, that next major swing low I'm looking at is up here at 43.40. So again, getting through 75, getting through 12, getting through the major eye level at 24 is making me I'll be watching this 43.40. So we got 43.40 up there, and then a little bit further than that, we're right up into our dividing line. Remember, between those two structure zones in the market here, that's what that gray line is, kind of the top and the bottom of the two boxes that I drew. So we're going right into that, say, 55 to 65 area. So that's what we have to the upside coming into the open this morning. And what I want to do is make sure that all of these are getting copied over to every chart. So let me just make sure this is all charts. And then this one as well. All charts. And I think the rest are all set to all charts. All right, so that's what we're looking at above us if we do get this strong bullish push. On the opposite side, and keep in mind, I don't want to forget that if we don't break through the high of yesterday at 75, the 4-hour and the hourly are going to have a nice clear bearish divergence. So we'll want to watch that. One other thing I'm noticing, and if you guys remember back to yesterday, I said because the market obviously is dynamic, these things are always moving. So yesterday we said we're still stuck in a pretty bearish part of our 4-hour and I think our 60-minute charts. So yeah, we were all down here way below 50, way below 40. Coming into this morning with this strength coming to the upside, we've gotten up here to break above 60 on the 60-minute chart, and we're getting up to the 50 line, the midline here on the 4-hour. So it'll be interesting this morning to see if we do get the breakout to the upside, we are getting some agreement with the range rule. So I'll also be watching that. So let's look at what's going on below us here. If we do pull back, if and when we do pull back, we're going to want to be aware of what we have below us here. And again, this area, I told you I'd rather not be trading in, is what we're going to be pulling back into. And so because of what's happened here, it's going to be hard to really eke out the most relevant levels because there's just so much in here. So just going to have to bear with me on that. But what do we have? We've got, well, look at that. Right now, we pushed right to our major eye level at 62, peaked above it, and just failed. So there's actually potentially a nice little short right off of that major eye level. But anyway, I digress. Let's take a look here. I want to look at the retracement. So let's look at the push just from the low that we made up to the high right here. Yeah, so 50% of the previous day happens to also be 50% of this overnight leg. And then our orange line and our major eye level are all basically right here. So let me go ahead and highlight this. I want to make sure it's right out to 15 here. So we've got 42.13, again, give or take a little tiny bit there, down into the 50% retracement. So let's call it 06 or 07 to 13 here. That little area to me looks pretty ripe. So let me make sure this is all charts. So if we do pull back And remember that the current retracement scheme is assuming that that high that we made in the overnight stays. So right now, we're getting a lot of alignment with the retracements there. A little bit deeper, and I'm just looking back. Remember, this was our shaded zone off that swing high back there. I'm not so sure that swing high is quite as relevant anymore. Now that we've kind of chopped all through it, we've used actually the back end as resistance. So it might have actually become somewhat of a relevant, let me see something here. Yeah, I'm not so sure I'm in love with relying on that level anymore. It's basically done with. Um, but there are some good support and resistance just a few points below it. So I'm going to get rid of this. And we're still going to be looking at basically right here, 93, which is what I think the level really should be, somewhere right around 90, 95. So 95 down into 89 there is going to also be important. So again, this is really, in my opinion, maybe a no trade zone if we end up pulling back into all this junk. But if we do, I think the highest probability areas for a potential turn or attempt to bounce is going to be somewhere within those two shaded regions. And then finally, let me just take a look here. I do think that this little area down here is still relevant off of that 63.75. Let me just make sure this is, we're going to do all charts on that. I still think that level is relevant there from around 63.50. So pulling back again right here, and then that 63.50, and then we're back to testing the lows from the last day. So that's what we have below us here. If they do break through, remember we kind of spent time looking at what we have way below here if the lows break here at 0175. So let's see. Lows from yesterday break. Like I said yesterday, I think it's going to be a nice clean shot right to 41.11. And if 41.11 doesn't hold, we're right to the lows at 0175. If 0175 breaks, we've got just about a 15-point push down to 86. And then a little bit further, 20 more points down to 47. And then that brings us all the way down to this 4011, 4005. And we'll have to just kind of go from there if it ends up happening. So hopefully that helps you orient yourself coming into the open. Again, not really the most ideal area down over in here to be trading in the previous daily range. But be aware of those two shaded regions, aware of that 64, 63, and then down into the levels I just mentioned. On the other side, again, anything's possible. If the bulls just start ripping it, a lot of these levels that we're watching could just be disrespected and they could just chug right through a lot of it. So again, rather than just trying to short these levels, it might make sense to get long and take profit in case there happens to be a reaction up there. So that's where I'll leave it for this morning. Have a great rest of your, there's one last thing I need to leave you with. Getting through the previous daily high, which is really the most important thing I've been mentioning all morning. That's 50% of the whole leg down from this sell-off that we got from March 3rd, where we got that bearish divergence on the daily. So getting up through there is going to be another good potential clue for the bulls, right? Anyway, that's where I'll leave it. Have a great day, and we'll be back here tomorrow. Have a good one.